Hello folks, how to read a candlesticks charts, how to use it for trading. This type of questions I always hear from you guys in my messages. So in this video, I will explain how to read a candlestick chart quickly and productive to using for your trading. If you're ready, let's dive in. What is a candlestick? A candlestick is a visual representation of price movement over a specific time period in trading. It shows four key price points. Open, the price at the start of the time period. Close, the price at the end of the time period. High, the highest price reached. Low, the lowest price reached. Each candlestick has a body, the range between open and close, and wicks, shadows, that extend above and below, indicating the high and low prices. Green or white candles mean the price closed higher than it opened, bullish. Red or black candles mean the price closed lower than it opened, bearish. Candlestick patterns help traders analyze market trends, momentum, and potential reversals. The terms bullish and bearish in trading come from the way these animals attack, symbolizing market movements. Bullish, bull market. A rising market. Bulls attack by thrusting their horns upward, representing prices going up. In a bull market, investors are confident, buying increases, and prices trend higher. Bearish, bear market, bear. A falling market. Bears attack by swiping their paws downward, representing prices dropping. In a bear market, investors lose confidence, selling pressure increases, and prices decline. Green candlesticks equals bullish. Price closed higher than it opened. Red candlesticks equals bearish, price closed lower than it opened. Body, the main part of the candle, showing the range between the opening and closing prices. Wicks, shadows, tails. The thin lines extending above and below, indicating the highest and lowest prices within the time period. Doji, a candle with little or no body, showing market indecision. Why are candlesticks important? Candlestick patterns reveal the battle between buyers and sellers. Traders analyze them to make informed decisions. This is called price action trading. Reading candlesticks on a chart. Each candlestick represents a time period. 1 day equals 1 day, 1 hour equals 1 hour. The bottom bar shows the date time, the right bar shows the price. Green candles, open price at the bottom, close at the top. Red candles, open price at the top, close at the bottom. Wicks indicate the highest and lowest prices reached. Trends and momentum. Uptrend equals series of higher highs and higher lows, bullish momentum. Downtrend equals series of lower highs and lower lows, bearish momentum. Sideways, ranging market. Price moves within the same high and low levels. Consolidation. More green candles than red equals buyers in control bullish. More red candles than green equals sellers in control bearish. Large candlestick bodies equals strong momentum. Small bodies equals weak momentum. Identifying trend changes. Uptrend, downtrend, lower lows and lower highs appear. Downtrend, uptrend, higher highs and higher lows appear. Momentum, gain. Tight price movement and increasing candle size. Momentum, loss, wide swings, shrinking candles, or color change after a trend. Listen to the tips. More red candles equals price decline, bearish trend. More green candles equals price rise, bullish trend. Alternating red-green candles equals indecision and market consolidation. So guys, if you found this video helpful, like, comments, and subscribe this channel. Let me know what topics you would like us to cover next. For more trading content, visit my Telegram channel and see you in the next video. Peace.